Good afternoon, everyone, and welcome to Asean Business Report. Today is Monday, the 11th of July, 2011, and you're with me, Nathakorn Plotty.
And also me, Onganan Amatayakun. Today we're taking a stage, starting this week, scoping to the ASEAN country, Malaysia.
Yes.
Starting off with Malaysia Prime Minister Najib Razak may avoid calling an early election this year after the police clashed with thousands of opposition-backed activists on July the 9th. Police detained 1,697 people as demonstrators protesting against what they call unfair voting practices marched on Kuala Lumpur landmarks including Merdeka Stadium and the King's Palace. Coalition for Clean and Fair Election Chief Ambika Srivasan was among those held, and opposition leader Anwar Ibrahim was injured when tear gas was fired, local media reported. The protests were the biggest since 2007 in a nation governed by the United Malays National Organization since Malaysia's independence from the UK in 1957. The coincide with rising pressure for political change in Malaysia's neighbors, with Thai voters this month ejecting a party that used soldiers to disperse opposition protests in 2010 that led to more than 90 deaths, and Singapore's ruling party in May winning the narrowest election victory since independence. Ui Ki Bang, a senior fellow at the Institute of Southeast Asian Studies, said from Singapore that from Saturday's event, Najib is losing support. While a vote isn't due for 2 years, speculation that Najib would call an early election rose after his coalition won 77% of the seats in a local election in Sarawak State in April. Najib was cited as saying yesterday by the official Bernama news service that the government is not frightened of facing the opposition in the general election. Equity investors, however, showed little concern that the planned protests in the run-up to the event, with FTSE Bursa Malaysia KLCI index closing at a record on July the 8th.
And we have a phone-in guest with us from Malaysia, is a freelance writer and actor, Mr. Kee Tuan Chai. Welcome to Asean Business Report.
Thank you.
Mr. Kee, can you tell us about this rally that Saturday was pretty spectacular? Do you think it's possible that it will happen again?
I think it would have been much more spectacular if there had not been such a massive clampdown on the KL City Centre, the Kuala Lumpur City Centre.
I have to agree.
Many more people would have come. There was so much fear-mongering. There were so many roadblocks. The government was making it so difficult for people to come from the other states in the country. People had difficulty getting into the city center because of the shutdown in public transport. If that had not been the case, a lot more people would have come. Let me tell you that. And the wonderful thing about the rally, I have to say, is that the turnout was comprised Malaysians of all races, young and old, and there was even a one-legged man who was walking for fair elections. It was wonderful to see. It was fantastic.
That's a great picture. Well, it's a little bit of a deja vu to Thailand's last year, but anyhow, does this event really hurt the image of Malaysia, or has it boosted?
I think you have to be very careful when you say hurt the image of Malaysia or hurt the image of the government.
Right.
You have to separate the two. A lot of people tend to think that when you say Malaysia, it means government as well, but it does not. It does hurt the government, yes. And I think the government is now very worried about what happened. Despite all it did to try and stop it, people came. People were defiant. People were not afraid. And when people show that, the government really has to listen to what they want. Otherwise, it's going to go down.
Correct.
I see. And as the trend of rallies to oppose the ruling party, do you think that this will lead to any kind of reconciliation?
Reconciliation in what sense?
Between the opposition and the ruling party?
No, I don't think so. I think Malaysia is now braced for a two-coalition system. I think Malaysians want it because we would rather have two parties contending for position rather than to have a monopoly or a one-party state, which has been the case since we got independence.
I see. And do you think this transition will have any repercussions on the economy?
Not at all. Why should it? I think it's always healthy for the economy when you have a healthy democracy. And that was what this rally was all about. It wanted to have a healthy democracy. It wanted to have electoral reform, fair elections. And I think if outsiders were to see that Malaysia practices a healthy democracy, they will be more than willing to come in and invest.
So how would it look from now on? What is the likely next move by the opposition and the government and the people?
Well, I don't expect elections to be called so soon. I think at the moment the government is deep down very afraid of the repercussions of the rally. They're trying to do some kind of damage control. They're actually coming out with a show of force. Yesterday, the Prime Minister quickly got together 6,000 people of his party members in order to tell people that, look, you know, we have the numbers, you know. We have 3 million members. All it takes is for us to come out with 1 million people, and we will conquer Kuala Lumpur.
Even the Chinese, they took to the streets.
Oh, yes. Thousands of Chinese took to the streets. I saw them with my own eyes. And this is a very, 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 very good and healthy sign. It used to be that the Chinese would stay away. But now they're coming out, and they're coming out in large numbers. They are saying to the government, you know, we are as mad as hell, and we're not going to take it anymore.
Okay. Thank you very much for sharing with us, Mr. Kee.
Thank you.
Okay, that was Mr. Kee Tuan Chai.
Yes. And now let's take a closer look at the local events. The Bank of Thailand will meet this Wednesday, and it is widely expected that it would hike the policy repurchase rate by 25 basis points to 3.25%. According to DBS Global Research issued this morning, the market expectations for the year-end policy rate, as polled by Reuters, have been bumped up by 25 basis points to 3.75%. This follows the elections ushering in the pro-Thaksin Pheu Thai party with its unabashed populist policies and big-ticket spending. DBS Global Research expectation, driven by its long-held above-consensus growth and inflation forecast, remain for the policy rate to be lifted to 4% by the end of December. This is higher than earlier and current consensus expectations. Comments so far from Prime Minister-elect Yingluck Shinawatra suggest the new government's policy may be biased towards an expansion of subsidies in line with electoral promises. This approach lends itself to suppressing inflation in the short term, but fanning it in the middle term. Any undershoot in inflation would thus be temporary, and the risk of the 2012 inflation forecast of 4% and rate forecast of no further hikes could lie to the upside. Of course, it is by no means certain that the government will be reckless and prioritize consumer spending over capital expenditure. Yingluck has come out to assert that she would keep the spending promises that could be implemented, and she would not hesitate to delay out those that could not be implemented. Thaksin Shinawatra, the de facto leader of Pheu Thai, spoke from Dubai that 300 baht minimum wage would be implemented in Bangkok, whereas other provinces would see the minimum wage at a lower rate proportionately. Historically, DBS Global Research said pragmatism has tended to rule eventual policy decisions in Thailand, regardless of the direction and tone of the initial policy discourse. However, this continues to be the case.
And on the policy rate issue, we are having the head market and economic research capital markets business division of Kasikorn Bank, Kun Gopsit Silapachai, on the line with us today. Welcome, Kun Gopsit.
Thanks for having me on the program.
Good afternoon, Kun Gopsit.
Good afternoon. What is the outlook of the policy interest rates decision this Wednesday? They're having a meeting this Wednesday, so what's the outlook for it?
Well, I guess it's almost unanimous if you survey the markets. Almost about 20 out of 21 economists that have been surveyed, including us, are looking for a 25 basis points move on the policy rate. So we will take the policy rate from 3% to 3.25 by this Wednesday.
I see, Kun Gopsit. And what's your outlook what's your assessment on the new government's economic policy, which has heavily been under debate?
Well, I guess I think you, if I heard you correctly, the implementation of the 300 baht minimum wage per day implementation is going to be very tricky, because if we look at the minimum wage for the past 11 plus years, we started in January 2000 at about 160 baht per day, and we've moved that to about 215 baht per day in a span of 11 years. So if we take it from about 215 to 300 within a short time frame of less than a year or so forth, it's going to be unavoidable to impact inflation very severely. Let me read to you some of the numbers that we are trying to estimate of the impact. Yes. If we do take if we do take the minimum wage to 300 baht per day, immediately if it is implemented, you could probably see producer price or on the cost push side increase by almost 70%. If we look at the historical relationship between minimum wage and producer prices. And in terms of headline inflation, you can probably see that going up to about 41%. And on the core inflation front, you can see the inflationary pressure kick up to about maybe 18%. So, and then it comes down to how will we spread this out. If we do it very abruptly, then we're going to have inflation very, very quickly. If we spread it out, then I think producers and consumers will have time to adjust to the inflation impact. So it's all very tricky, as we can make out right now.
Okay, as long as you're touching on the inflation, can you describe the inflationary threats in the second half of the year for Thailand?
Well, for example, I think the global economy is still very polarized, because the Western world still has a big deflation problem, and then on the developing world, we still have a very big inflationary problem. The inflationary problem comes back to a host of factors. One is, of course, our economy is growing at a higher pace than the rest of the world. So therefore, the demand side is going to be very, very tight. On the supply side, the issue that we always are concerned about is, of course, the monetary policy that's going on in the U.S. primarily is going to be on the ultra easing side. So they're going to be printing more dollars into the market. And I would probably like to make the note that the market's still debating whether or not there's going to be a QE3 or not. I would like to say that actually QE3 has already been in place.
It's already been in place.
It's already been in place.
What experts have been saying is going to take effect in fall.
Well, I think let me explain that. It's already here. It's already been here since the beginning of May. Because if you look back, that QE2 was supposed to, the Fed was supposed to buy about $600 billion worth of Treasury securities. That's what they stated back in November 2010. Year to date, by June 30th, they've already bought 767 billion worth of U.S. Treasury. So they've already been buying. They've already been in a QE. Let me put it this way: QE sequel for 176 billion already. So this is why we have another inflationary problem, because the commodities market continues to price commodities in terms of dollar per unit. Therefore, as more money supply in dollar terms continue to come out, chances are it's going to help keep the support levels for commodity prices in general. And therefore, we come back to this problem that if our economy is still growing and we are still going to run monetary policy, which is relatively conflicting with one another, we are trying to tighten interest rates. That's trying to reduce inflation, but at the same time, we're reluctant to allow our currency to appreciate to offset the effects of imported inflation. So it's like if you go home, you turn on the air conditioner, but at the same time you open your windows. You're not going to get any cooling effects in general.
Okay, thank you very much, Kun Kopsit, for sharing with us today.
Thanks for having me on the program.